But we're closing trades right here on 80 now. We're still holding out okay, flattened out. 25,633 is where we're currently at. But the only silver lining is that the breadth of the market is in favor of the advances. It's a count of 127 standing to the greens right now. Samman Capital, that surged up about 4.5% in trade. Hero Motocorp is looking good. That stock holding higher in excess of 4%. Bajaj Auto has made a decent move, 2.5% of an uptick coming in. And of course, the metals rally and the IT rebound is also what is giving fillip to the index today. Other than that, of course, Nalco has been a very strong show, 4.5% of an uptick. Loris Labs and SAIL are some of the other participants which are holding out very well. Let's welcome on board now Asit Bhandarkar and figure out what he's making of the market right now. Asit, great to have you on ET now. Thank you so much for your time. Asit, the great debate has really been all around IT, right? On whether or not, at least on the charts, it seems like it's getting into an oversold zone. But fundamentally, do you start nibbling in right now or not?
Yeah, hi, everybody. Hi, Aisha. Good afternoon. Yes, I think IT has been a source of pain for most long-term investors, particularly funds like us who have a diversified portfolio. But our approach here has been really to be a slight underweight on this sector and see through this volatility because, like you mentioned, the fact is that these are companies with solid cash flows. And I think, although the challenges that they face are real, particularly with related to the revenue deflation that they expect, we do believe that they could have some levers, and we'll have to see. It really becomes an execution game, which will differentiate one company from another. That said, it's a tough thing right now. The news flow is just too much. But our belief is that it will take some time for it to get factored into the numbers, and companies would have enough time to get their act together. So yes, we are playing IT in our portfolios in a very disciplined manner. Because of the fact that the companies are now available at a discount to their say 5-year valuations or 10-year valuation benchmarks that these companies have had. Growth is a challenge. It is hazy. Environment is changing every day. But the cash is real.
Understood. But Asit, is it just a tactical call, or are you convinced about, holding on to IT and buying it at these levels for a longer haul?
No, as I said, Aisha, see, we believe in having a very disciplined approach to investment, right? We are an institution, we are a mutual fund, and to that extent, that's how we look at it, right? We are trying to hold on to a slight underweight position, as I said, but we are not sellers clearly at these prices.
Very interesting. Asit, what are the other pockets? Because while we've seen some bit of headwind, at least in Indian markets, but we've seen some sectors doing very, very well for themselves. Energy, for example, the entire basket has done very well. The Nifty Energy Index is sitting pretty. The Nifty Metal Index, the PSU banking counters. So that rotational trade is clearly at play. Where is it that probably the next leg of rotation is going to come from, in your opinion?
I think that's the whole thing, right? In last 15 months, what we have seen is that markets have been rotating from one story to another. And they, whenever it rotates out of a sector, you would see that it rotates back into that sector after a few months. Because the movement and the volatility is such that value eventually emerges wherever market is rotated out of also. That said, quite clearly, it's a mug's game really to figure out where the next where the market will rotate to next, etc., etc. Which is why I think at a fund house, what we are trying to do is have a very disciplined approach in terms of sector allocation. We are largely sector neutral across sector, across all the large sectors, with a slight underweight on energy and a slight underweight on IT. But we are preferring to play this through bottom-up stock picking incrementally, because I think the bigger story in this market quite clearly is that the broader markets have corrected meaningfully over the last 15 months. Earnings trajectory is on an upswing. So instead of now focusing on the sector rotation game, it is rather better to do your own bottom-up stock picking and focus on that, because that perhaps will have a better risk reward going ahead. I think we shouldn't forget that the earnings season, which we have just passed by, has been a decent set, with NSE 500 as per us growing at about 19% YOY. And particularly among the large, mid, and small caps, we've seen that the small caps have grown YOY at about 26% PAT growth. Even large caps, for that matter, have grown at 18%. And mid caps have grown at about 16% in spite of a very unfavorable base last year. So these are very healthy numbers. And for us, I think what it really tells us that we should be focusing more on, making maximum of the opportunity that this market is giving us in terms of bottom-up stock picking, rather than worry about sectors and such.
Okay. And Asit, even within bottom-up, how should one look at large versus mid-small? Is there a preference there at all, or is there a tilt?
Quite clearly, given the volatility in the market, geopolitics, the fear, the earnings compression that was there in the market, I think market was clearly tilted towards the large caps and very, very visible growth stories in the mid cap segment. I would now think that it is time where probably we can look at even small caps right now. So incrementally, I would think we would be more bullish on small caps in terms of stock picking, because the stocks have clearly corrected. That said, we will continue to, see, look at it this way: 18% profit growth YOY for large caps is not a bad number, right? So there are opportunities all across, and which is why I said, it's, I think, right now time to look beyond just the caps and sectors.
Okay, Asit, thank you so much. We'll let it. We'll leave the conversation there. Thanks for coming in and speaking with us. Viewers, what we'll do is slip into another very, very short break. We'll come back, continue to take all of the stocks that are buzzing, and try and get you a perspective on what's playing out in markets. Stay with us.